If you're diving into futures and mastering it, you're setting yourself up to create a massive income generating machine. But without the right foundation, you could find yourself easily losing money the next couple of years, bouncing between strategies only to find yourself more confused than you are at the beginning. Hi guys, welcome to Clavis Trading. My name is Renko, and as most of you know, I've been a trader for over more than 5 years, and I'm completely self-taught. Whether you get some experience or you're completely brand new to the game, today I'm breaking down a simple process that I wish I knew from day one. This is how to start trading the right way. We're going to rewire your mind to think like a pro trader, dive into the software you'll need, the basics of charting, understanding the key math about trading, and how to scale up even with small initial capital. By the end of this video, you have a clear path to mastering trading and building that income generating machine for yourself. Now before we kick off, let's do a quick exercise. I have in my hand a coin. Head equals $300, tails equals $100. So if we flip this coin 10 times under the same conditions, we can expect around 5 times heads and 5 times tails. Even if you hit 3 tails in a row, the average will statistically hold true. Now knowing this, it wouldn't make sense to be emotionally invested in the outcome of a coin flip, would it? You'd focus on the long-term outcome instead. In trading, this coin flip will represent your strategies and risk management. It's all about your winning probability. If you start trading with this mindset, you're already ahead of 80% of new traders. But that's just the beginning. Next, we're gonna talk about how to apply this mindset to the real market. Today, we're covering the 3 foundational tools that you need to trade futures effectively. First, there's your charting platform. In my case, I use Ninjatrader 8. Then you'll need something like Excel, Google Sheets, Notion, or a trading journal like Tradezilla to track your trades and strategies. Finally, your brokerage platform to execute your trades. But we won't dive into brokers yet, that will come at a later time. But understanding how to use these tools is critical. When we open Ninjatrader, you'll notice my charts are clean, just candlesticks, nothing else. This is crucial. I've watched countless traders fail because they clutter their charts with unnecessary indicators, trying to force a process that doesn't work. The successful traders, they start simple. If you start by overloading your charts with indicators, you're already setting yourself up for failure. It's called analysis paralysis, and it's a one-way ticket to confusion. So let's keep it simple. I'm going to walk you through how markets move, how to read these charts, and then we'll add complexity as needed. So promise me you'll wipe your charts and follow along. Here's my chart pulled up. I trade ES futures because the markets are dynamic and the leverage allows me to maximize my positions with minimum capital. But let's first focus on the basics. The candlesticks on your charts here, they tell you a story. The story of buyers and sellers interacting in real time. The bottom of the candle is where it opened, and the wick showed the lowest point reached, and the top is where it closed. And the highest point is the peak performance in that time frame. But here's what most traders miss. The movement of these candles is driven by the battle between aggressive and passive market participants on the order book. The number of orders at each price level is called volume, and it's a direct representation of market participation. When we look at charts, we see a visual representation of human psychology. This is the battle of supply and demand. So if supply outweighs demand, the price will drop. When demand overpowers supply again, the price will start to rise. Our job as traders is to see where these shifts happen and to go along with the big money. So one of the key elements of trading is recognizing market structure. This is how we predict those supply and imbalance zones or liquidity zones. If we can spot where demand might outstrip supply, we can position ourselves to profit from that move. Mostly we follow low and high volume nodes, like this, like this, like this, and of course like this. So for instance, if we identify a potential reversal area, we can buy in, ride the price increase and sell at a higher level. Market structure will give us insight into the market's next move. We use patterns and key levels to understand these shifts. For example, an uptrend consists of a series of higher highs and higher lows. A downtrend is exactly the opposite, consisting of lower highs and lower lows. By drawing out these critical zones, we can start to understand how price will move and where bigger players are positioning themselves. So we can start understanding how price works and reacts, and we can anticipate future movement. Just like our coin flip, trading is about playing probabilities. You won't win every time, but by sticking to good risk management, you can come out profitable in the long run. Now let's talk about position size and money management. This is where most traders will screw up. Never enter a trade without a stop loss, and always know exactly how much it is you're risking. Let's say, for instance, you want to risk $50 on a trade. You need to calculate your position size, so when the trade goes against you, you'll only lose that $50. One mistake beginners make is randomly deciding their position size on a gut feeling or confidence. This is a rookie error. You need a systematic approach where every trade follows the same rules. This way, you can measure your performance accurately over time. Leverage is also a powerful tool in futures trading. It allows you to control a large position with a small amount of capital. But with great power comes great responsibility. You need to understand how to use that leverage properly, or it can quickly wipe out your account. So for now, let's just remember, leverage should enhance your strategy, not create additional risk. Finally, you need to journal and practice your trades. This is how you refine your strategy and improve over time. After each trade, take a screenshot, note the details, entry, exit, profit, loss, or any other observations. This will help you track your progress and identify your ideas for improvement. Before you start trading with real money, you need proof that your strategies actually work. So for instance, these two above are losing strategies, these two below are profitable strategies. So you need to practice on a sim account until you get the right data to become consistently profitable. But don't stay in sim too long. Trading real money is an entirely different game. You need to get comfortable with it as soon as possible. That's why I personally suggest to jump into a prop firm like Bullanox or Topstep within a month of sim trading. In our private Discord, which is linked down below, we focus heavily on these principles. Our members are mastering these systems and making consistent profits. If you're serious about trading, join us. We've got a whole lot of tools and resources to get you started the right way. Mastering trading can give you time, location, and income freedom. It's a skill that you can use to scale your income to whatever level you desire. If you found any value in this video, smash that like button, subscribe to the channel, and let me know in the comments what resonated with you or if you have any further questions. I love hearing how these strategies help you in your trading journey. That's it for today. Until next time, keep grinding, keep learning, and I'll see you in the next video.